Hello and welcome everybody to this July 7th, 2022 edition of the GoNoGo Show here on StockCharts TV. My name is Tyler Wood and I will not be joined today by my business partner Alex Cole and the founder of GoNoGo Charts. He is traveling this week, but let's dive into some charts and let's see if we can understand a little bit more about what's happening in the market according to trend, starting with our GoNoGo heat map. So remember, for those of you who are new to GoNoGo Charts, what we're doing is combining all of the most robust technical analysis information that the market provides, multiple indicators computed behind the scenes to show us just a clear idea of what's happening with trend. So from the top panel, we're looking at equities. We've got no-go colors, pinks and purples, throughout the second quarter of 2022. And here into July, that trend continues. Second panel is the Treasury bond prices, the TLT ETF. And we saw a little bit of bond purchasing. We got to an amber neutral territory, but we're back into a strong no-go. Purple bars, heavy day today for bonds as they're continuing to sell off. And of course, that moves inverse to rates, which are again rising. Third panel, we've got the U.S. Commodities Index. That's been the trend of the year so far in the first half. But of course, we have seen that rotate from a strong blue go to a weaker form of those trend conditions, that weight of the evidence, through a neutral amber territory and into the no-go trend. So the U.S. Commodities Index, obviously, we're talking about the oil trade, materials, agricultural commodities. They're all in a no-go trend, strong no-go to be clear. Fourth panel, we're looking at the US dollar, which has been the chart of Wall Street all week long. Lots of people taking note that we are breaking out above 2002 highs. So we've got a multi-decade breakout in the US dollar. Next area of resistance is quite a ways off. And so we're seeing that dollar strength continue on a daily, weekly, monthly, even quarterly basis. A lot of investors holding cash. And then, of course, in our bottom panel, we want to keep an eye on the cryptocurrency space, just using the Bitcoin to US dollar chart as our proxy there. We're still in a no-go. That has weakened in the last few weeks. There's some correlation between Bitcoin, some of the larger cap cryptocurrencies, and our equity space. So that's our cross-asset heat map. That just gives us an idea of the flavor of the market, what's working. Right now, we're in bear territory across the map, but folks who are holding cash are benefiting right now. So if we change our eye and we look just at the U.S. equities markets, the S&P 500, SPY is the ETF ticker that we're looking at. On a daily basis, we are in a no-go trend. It has weakened through a little bit of counter trend rally. But again, as we've been talking in the last several weeks, these counter trend rallies have been short-lived, and they really haven't been as volatile to the upside as what many investors were expecting. I want to draw your eye just real quick to that lower panel. GoNoGo Oscillator is a combined indication of many momentum signals, many different indicators blended into one. And just as a refresher, how this works, we blended a lot of information into both a momentum indicator, which can be used in the traditional sense, overbought and oversold. Ours ranges from -6 to +6. We've also incorporated volume into this line. So when we're in this lighter green line, we know we have weaker volume. It becomes heavy relative volume when we're on this dark blue line. So, of course, when we're looking at this, we broke below the zero line. We've talked a lot about the importance of that objective neutral level for momentum indicators. So when we're using momentum indicators in the context of a trend, we want to see continuously oversold conditions in a downtrend. We wouldn't expect to see positive momentum readings when we've got a strong downward trend condition. And of course, when that does happen, it's a threat to the trend. So we've been in negative territory. This counter trend rally bounced the GoNoGo oscillator into positive territory. Was not enough to signal a trend change. Didn't last. And we returned to the no-go territory. Now we are chasing that zero line, what Alex and I refer to as riding the zero line, meaning there's a sustained neutral level for momentum. We've also seen that volume has dried up. So in the context of investor behavior, we've got this tug of war happening between bulls and bears in the S&P 500 on this daily chart, where it's not quite clear what directional momentum we've got. Clearly, the trend indication is still in a no-go. Based on our trading rules, we would not take a long position on this daily chart until we see further evidence to the upside. But we are seeing that GoNoGo oscillator tracking the zero line, building the GoNoGo squeeze. The importance of this orange grid down here is that we know from Keltner bands and Bollinger bands and a lot of other really legendary technicians who have created tools to help understand volatility. We know that when we've got a reduction of volatility, when there is that tight tug of war, knife fight between the bulls and bears, we know that the break of that volatility indicator can lead to a high velocity move in the direction of the break. So we're tracking this very closely right now as the S&P 500 is still in a no-go trend. A break to the upside out of this max squeeze in the GoNoGo oscillator could be a good sign for the bears if we were to break to the upside. All else being equal, with the trend in a no-go formation, we'd expect further downside momentum. And if that were the case, if it breaks down to the negative readings in the GoNoGo oscillator, we're going to see another one of these red circles. So for those of you who play both long and short, and for a lot of the institutional long short equity managers that we work with, they're looking to stack into their short trades, taking outsized short positions when they see this trend continuation icon. These red circles in a no-go trend are telling us that momentum is coming back in the direction of the underlying trend. So as trend followers, we want to pyramid into our positions. We want to get those outsized gains by really leaning in, pressing our bets when the trend is confirmed with the momentum oscillator. So GoNoGo oscillator, we're at an inflection point here. If we see that break to the downside, perhaps later this afternoon or even tomorrow, that will be our signal that we know the no-go trend will continue, and even a great position to get into the short trade. All right, moving on from the S&P 500, we want to take a look at our sector RelMap. So this is the GoNoGo sector RelMap, meaning we're looking at relative strength trends rather than just the absolute trends. That first heat map that we looked at was just the absolute trend of each of those asset classes. And now we're looking at the individual sector ETFs of the S&P 500 against the benchmark S&P. So in the top panel, we've got three sort of technology growth-oriented sectors, the information technology, consumer discretionary, and communication sectors. Now, throughout 2022, these have been in no-go territory. We're seeing a bit of a change here this week. We're in amber territory on both the XLK, the technology, and the consumer discretionary, but of course, breaking into go trends for consumer discretionary and the communication sector. So potential return here for some relative strength in the growth equities sectors. Continuing down this heat map, this RelMap, we're looking at the energy sector, strong no-go. Financials, strong no-go. The industrial sector, strong no-go. Materials, strong no-go. These cyclical sectors had really performed quite well throughout the year, financials being the exception. But we're seeing those on a relative basis to the S&P 500 underperforming. So we just reviewed S&P is in a no-go trend. These are no-goes relative to the S&P, meaning they are leading the market down. But here we have what has been a more continuous go trend, probably a better opportunity for long positions in some of the defensive areas of the market. This is the healthcare sector ETF, XLV. We've got consumer staples also in a weak go trend. We've got the utilities sector and, of course, real estate. Those have been more sustained, a little more durable. We've seen some counter trend rallies in the past here for technology that have been very short-lived. And these are some of the most beaten down sectors of the market. Makes sense that on a relative basis, short-term relative strength could appear. But down here in the defensive sectors is where we're really seeing more durable, stronger trends. And so we're going to take a look today at both the healthcare and the consumer staples sector. But I want to look real quickly at the XLP, the consumer staples individually. So we're still in a no-go trend, absolutely. On an absolute trend basis, consumer staples still have a downward draft. but relative to the rest of the market, this sector is outperforming. Now, this is our daily chart. Let's just jump out to a weekly and take a little longer term perspective. What we're seeing is that we're in amber territory and we are at the zero line. So on this weekly chart of the consumer staples sector ETF, we've got a pretty strong, durable go trend. Nothing very exciting when you're at cocktail parties. Talking about consumer staples is not what gets everybody excited, but we do see this holding up better to the overall market. And if we jump back to that daily, what really caught our eye and what went out to our institutional subscribers in the GoNoGo research letter Monday morning pre-market was that this break out of the squeeze to the upside is a significant threat to the no-go trend. As we just talked about on the S&P chart, when we've seen positive momentum and we see a break out of a go-no-go squeeze, we know that that can precipitate more high velocity moves in that direction. So we've got positive momentum after a period of negative and sustained neutrality for the XLP, the consumer staples sector. So we'll be watching closely to see if this no-go trend changes over. We've had a few amber bars. We are currently in a no-go on the daily basis, but for the XLP, that's holding up on a relative basis much better to the overall market. Now, a good friend of mine, Lipper award-winning portfolio manager and a great technician, CMT charter holder, Mike Hurley, told me about 10 years ago. He said, when we were going through the tech bubble burst in 2001 and 2002, what was a really helpful chart for a lot of people to just kind of wrap their minds around the economy and the stock market at that time was to look at the relative ratio of Cisco to Cisco. And here we're referring to the Cisco corporation that creates toilet paper and paper products generally, a consumer staple, versus Cisco Systems, a technology company. Now, this relative ratio is showing us that toilet paper is winning over the Cisco technology company. We've got strong go trends throughout 2022. A little period of weakness as the technology Cisco outperformed, but we're back into a lot of strength for paper towels and paper plates and toilet paper and plastic cups and you name it. So Cisco Systems being very defensive. This ratio chart is going to give us a little flavor of the market, meaning that we've got a lot more investors piling into something like Cisco paper products than Cisco technology systems. This is just the daily basis. If we zoom out to a weekly chart on this ratio, we can see that this move has been well sustained. This is the entire year of 2022. We've been rallying. We broke out above prior resistance. That's where we saw a little bit of the trouble for this ratio chart. But on a weekly basis, we know that this is sustained and above prior highs, breaking out of this horizontal congestion here in the last few weeks. So Cisco, the paper products, is for the win this week on strong go bars with positive momentum. The other one that I wanted to take a look at with you is Costco, which has been on a lot of investors' minds recently as a potential consumer staple bid for this weaker overall market. So if we're looking at the daily chart of Costco, what caught our eye was the break of the GoNoGo oscillator above the zero line, right back here, out of the no-go and into a fresh go. Now, this is the daily chart of Costco. It's a wholesale discount retailer, and there's been a lot of speculation by economists about the threat of recession. We know that economic data often takes years to be fully digested. So we'll probably find out sometime in 2023 whether or not we've entered a recession in the summer of 2022. So as investors, that's not going to be super helpful. What we can look for is the underlying nature of this market. And so when stocks like Costco are breaking out into fresh go trends, when we've got toilet paper beating technology in those ratio charts, we know that the flavor of the market is very defensive. So Costco is another one that caught our eye for a long position earlier this week when that broke into positive territory on the GoNoGo oscillator. Again, you can see this beautiful retest and breakout again for sustained positive momentum and then the trend change. Now, the going back to that Cisco chart, what really struck Alex and I on the daily basis. So again, this isn't the ratio. This is the individual Cisco paper products company on a daily basis. We see heavy volume as this stock reached its lows. We've got a series of higher lows, uh, pretty flat line up here. So this pennant breakout on heavy volume when we switched to the GoNoGo trend really caught our eyes, really wanted to bring that forward. Obviously, there's some overhead resistance up here at 90, but the breakout above this congestion zone tells us we've got a little room to run here for Cisco on the daily chart. Now, switching away from consumer staples, let's take a look at a couple of healthcare names, starting with Merck. Now, I know they're busy doing a lot of acquisitions. This is a large cap healthcare company, and so if we're looking at potential trends in the XLV in some defensive areas of the market, healthcare companies like Merck may experience that rising tide that lifts all ships. So here we are on the daily basis. We've had strong trends in Merck through 2022. We've had this period of weakness in June, and it looks as though we have fully recovered. We're back into the Go trend, and we've had this retest of the GoNoGo oscillator at the zero line. Now, volume is a little lighter, so we'd like to see if this trend is to continue. Some positive readings on the GoNoGo oscillator. We want to see support here at the zero line. Love to see volume come back in the direction of the trend, and to stay on these strong blue Go bars for Merck. Now, for those of you who are into a little higher beta play, let's just check out the ETF for the biotech sector. So this is the XBI, so Spider ETF for biotechs, and we obviously see a little higher beta play in biotech versus healthcare generally, but pretty hard to resist seeing this great bottoming process and then the breakout into a go trend. So let's talk through the life cycle of the trade a little bit. We're looking at a daily chart. We've been in strong no-go territory. We've had momentum continuation icons throughout that downtrend as we continued to bump our head against that zero line for GoNoGo oscillator. Brief period, broke above, broke positive. We even saw a trend change, but again down to the no-go as the oscillator broke to negative momentum readings on heavy volume. That preceded this major collapse, and we saw some trend continuation throughout this as well. Now, when we got to the GoNoGo squeeze, when we see it riding the zero line for GoNoGo oscillator, we've seen this knife fight between buyers and sellers. That's really indicative. That's common in a bottoming process, meaning at these lower levels, we're not seeing enthusiastic selling, right? So for the biotech ETF, there's a basing pattern here. Tried once more to the downside. We got that trend continuation icon. May have taken a short position again on biotech, but here we rally back to the zero line and we break through on heavy volume as this upside volatility breaks above prior resistance. That's where we see the trend change. We're in positive territory. We've had close to a retest of the zero line where we found support and rallied again. Now we are on strong blue Go bars for the XBI. We've got positive momentum working in our favor, and we've still got a little room to run to prior overhead resistance, somewhere up here around 90. So for a short-term trade, we'd expect to make a run at those prior highs. Were we to break through 90 in the biotech sector ETF, there's a lot of room to run on this chart. And if we just jump out to the weekly period for this biotech sector, you can see that's that's been a strong no-go trend. But where we're looking for opportunities in this market, where areas have been strongly oversold, we'd like to see continued strength on that daily chart to confirm a trend change in the weekly basis. So that's the biotech sector ETF, and we'll be looking to see if this GoNoGo oscillator breaks above the zero line into positive territory on the weekly basis, which would give us a little longer term perspective on biotechs as a long. I want to thank you all for watching this show every week, Thursdays at 3:30 p.m. on StockCharts TV. My partner Alex and I will be speaking next week at the Wealth 365 Investment Conference. It's totally free. It's open to everyone. If you want to learn a little bit more about how GoNoGo charts work, about concepts like relative strength, trend, momentum, volume, and volatility, we'll be doing 2 presentations. One on Wednesday, July 13th at 2 p.m., and again on Friday, July 15th at 2 p.m. We'll put the link in the show notes below. You do need to register, but it's completely free. We look forward to seeing you at that conference next week. Thanks to all of our Stock Charts viewers. If you're seeing this on YouTube, make sure you like and subscribe to this channel. If you're back on our site, GoNoGoCharts.com, thanks for joining us. And I encourage all of you to download the Stock Charts TV on-demand app so you can take this show and many others wherever you go. Thanks so much, everybody. Happy 4th of July to all of my American colleagues and peers. Hope everyone had some safe, healthy fun with your family and friends. And we'll look forward to seeing you again next week. Cheers.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.